Signal verified. OG John Original reporting. One identity, one platform. OG John Original. The name is the only signature that matters. Drop OG in the comments if you're locked in. Imitators are everywhere. Same format, same tricks. I do not sell anything. Stay sharp. Protect yourself. Good evening. Breaking developments are emerging from multiple fronts across the Middle East, with confirmation of significant military strikes, escalating energy market disruptions, and sharp movements in global commodity prices. Iranian state media has officially confirmed the death of Supreme Leader Ali Khamenei, following coordinated United States and Israeli airstrikes. State broadcaster described the Supreme Leader as having reached martyrdom. In a separate strike, former Iranian President Mahmoud Ahmadinejad was also reported killed, according to both Iranian media and Fox News. These developments mark a seismic shift in the regional conflict. In response to the strikes, Iran launched a large-scale retaliatory assault, deploying 165 ballistic missiles, 2 cruise missiles, and 541 drones. Of those, 152 ballistic missiles were intercepted, and 56 drones were destroyed. However, 35 drones successfully reached land, with 21 striking civilian targets in the morning hours alone. 3 people were killed, and 58 individuals from various countries were injured, with moderate damage reported to civilian homes and property across the UAE. Iran subsequently targeted the United States aircraft carrier Abraham Lincoln with 4 ballistic missiles. The Iranian Revolutionary Guards confirmed the strike through state media. Whether those missiles connected with the vessel or were intercepted remains to be confirmed. Iranian officials stated that the country will not yield to its enemies and will continue responding with what it described as strength, declaring that there are no red lines remaining. Global commodity markets responded sharply to these events, with gold, silver, and oil all recording significant price movements across weekend trading sessions. When traditional Western markets remained closed, physical and tokenized markets continued operating, revealing substantial price premiums that analysts and traders are now watching closely ahead of Monday's market open. With traditional Western markets closed over the weekend, physical and tokenized commodity markets continued trading, and the price movements recorded were significant. In the gold market, the so-called dark market touched $6,000 per ounce, not in yuan, but in United States dollars. PAX-G, a tokenized physical gold product operating on cryptocurrency infrastructure, reached $5,600 on Saturday before settling at $5,400. That figure represents a $124 premium above Friday's official spot close of $5,278. Because cryptocurrency markets operate around the clock, premiums widened considerably while conventional exchanges remained offline. Silver markets told a similarly striking story. China's Shenzhen physical silver buyback price, the price at which small distributors repurchase silver, surged by nearly $20 per troy ounce equivalent over the weekend. That placed the Shenzhen physical silver buyback price above $120 per ounce. Notably, most small Chinese silver distributors declined to sell their physical silver holdings, citing concerns over limited supply availability. Across various trading platforms, silver prices reflected a wide range of premiums over Friday's Western spot close of $93 per ounce. IG weekend spot silver was trading near $100. The Kinesis silver platform also recorded prices near $100. Hyperliquid showed a price of $96. Shanghai spot silver was trading at $105, while Shanghai futures reached $108. That translates to a $7 weekend premium on the IG platform, a $12 premium on Shanghai spot, a $15 premium on Shanghai futures, and a $27 premium in China's Shenzhen physical market compared to Friday's Western paper close. China's Dashang Bank issued a formal notice stating that if significant price deviations lead to a depletion of accumulated gold liquidity, trading would be suspended. A large volume of yuan-denominated savings was reported to be positioned and waiting for market open on Monday. A Chinese commodities trading advisor confirmed the details surrounding the sharp move in Shenzhen's physical silver market. Beyond metals, 3 assets are identified as carrying particular significance in the current environment. Gold, described as a monetary reset hedge, silver, characterized as an industrial shortage play, and oil, noted as an energy source that cannot be printed. All 3 were reported to be rising simultaneously during the weekend period. At the center of the energy market disruption is the Strait of Hormuz, through which roughly 20% of global seaborne oil trade flows. While the waterway has not been technically closed, it has been described as functionally frozen, not through physical blockade, but through the mechanics of war risk insurance. Ships traveling through the Strait of Hormuz purchase war risk insurance to protect shipping companies from the financial costs of potential attacks. When insurers refuse to provide that coverage, vessels stop sailing, and oil flows effectively halt even if the waterway itself remains open. 2 vessels have already been attacked near the strait. A Palau-flagged oil and chemical tanker named Skylight was struck near Kasab at the entrance to the strait, leaving 4 crew members injured and 20 evacuated. A second vessel, identified as MKD Vian, was also hit. Both ships were reported to be on fire near the Strait of Hormuz. In direct response to the elevated risk environment, insurance costs for a $100 million oil tanker jumped from approximately $250,000 to $375,000 per voyage. 150 tankers dropped anchor in open waters, with oil and liquefied natural gas carriers refusing to move, sitting off the coasts of major Persian Gulf oil-producing nations. Shipping company Maersk suspended all Strait of Hormuz transits. Brent crude oil prices were trading up between 8 and 10% over the weekend, reaching approximately $80 per barrel, with weekend prices holding those gains. The situation has been described as a violent negative supply shock, with roughly 20 million barrels per day of oil effectively frozen, alongside 100% of Qatar's liquefied natural gas exports suddenly blocked. Iran's military actions extended beyond the strait itself, targeting key port infrastructure across the Gulf region. Strikes were reported at Duqm in Oman, a port built specifically to provide an alternative route bypassing Hormuz. Iran also struck Jebel Ali in Dubai, a port that handles 60% of UAE imports and serves as a critical hub for the country's non-oil economy. Mina Salman in Bahrain, home to the United States Fifth Fleet, was also targeted. Additionally, the port of Haifa in Israel, which manages vital energy imports, was struck. The approach has been characterized as asymmetric warfare, noting that the strategy targets infrastructure that cannot be fully protected by naval carrier groups. The nations identified as absorbing the greatest impact from the Hormuz disruption are those most dependent on the strait for crude imports. Japan relies on 75% of its oil imports via the strait and is described as nearly 100% import-dependent overall, with Japanese tankers already reported to be turning back. South Korea sources 60% of its crude through Hormuz. India draws approximately 50% of its crude imports from Gulf states through the strait, equivalent to roughly 2.6 million barrels per day, along with 60% of its natural gas and liquefied natural gas supplies. China is identified as the largest absolute buyer, with 55 to 60% of its crude imports traveling via the strait, though it holds some diversification through Russian pipeline supply and is described as better positioned to absorb the impact than other nations, while still facing significant price pressure. Beyond the immediate military and energy developments, the report points to underlying structural conditions in metals markets that preceded the current conflict and remain unchanged by it. Silver recorded 10 consecutive monthly green closes prior to these events. Gold had posted its 7th straight record. The Shanghai premium on gold had been persistent at $12 before widening to $27 on Shenzhen physical silver over the weekend. Industrial demand for silver, spanning solar energy, electric vehicles, artificial intelligence data centers, 5th-generation wireless infrastructure, military and defense applications, and nuclear energy, has continued without interruption. Mine supply has been described as unable to keep pace with that demand. Central banks have been purchasing gold at record rates. Silver lease rates were reported to have spiked for 6 consecutive trading days prior to the weekend's developments. The report also acknowledges a counterpoint, noting that weekend premiums in commodity markets tend to capture directional trends, but can overstate the actual price gap. Futures markets are capable of gapping at open and then filling back toward prior levels. Strikes could de-escalate, the Hormuz situation could stabilize if insurance markets recalculate their risk assessments, and physical premiums could compress if paper markets push lower when trading resumes. The report also acknowledges that banks have coordinated price action during past geopolitical events. However, those considerations are set against a series of confirmed developments. Iranian officials stated that airstrikes would continue for days. Iran struck United States military bases in 5 countries. Iran targeted a carrier group with ballistic missiles. Israel stated regime change as an explicit objective. The Houthi movement was reported to be resuming attacks in the Red Sea. These are characterized as sustained military operations with regime-ending objectives from both sides, occurring simultaneously with the functional freezing of the world's most critical energy transit point due to uninsurable risk. For those monitoring markets when Western futures trading resumes, several specific indicators have been identified to watch. These include the size of the gap on gold and silver futures at open, whether the Shanghai premium on silver widens past $27 or compresses, the duration of ongoing strikes and whether Iran continues operations as stated, whether Hormuz closures expand or stabilize, and how oil prices hold or give back weekend gains when formal trading resumes. Tokenized gold platform PaxG was last reported trading at $5,400. Kinesis Silver and IG Weekend Spot Silver were both near $100 per ounce. Physical-backed cryptocurrency markets provided continuous price discovery throughout the weekend, while conventional futures exchanges remained closed, and the premiums recorded represent where buyers valued metals during that period. This has been a comprehensive breakdown of the military, energy, and commodity market developments reported over the weekend. The situation across the Middle East, the Strait of Hormuz, and global energy and metals markets continues to evolve. As always, audiences are encouraged to consult qualified financial and investment professionals before making any financial decisions. We will continue to monitor these developments and bring updates as the situation warrants. That is our report for this hour. Thank you for watching.